Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Wednesday, August 16th, 2023. The Bears are really starting to gang up on the Bulls. It's something I've been saying. I mean, obviously, this part of the move. I mean, they caught me by surprise, these gap ups and stuff, but there was absolutely no reason for us to be up at these levels from both a fundamental reason as well as technical and just pretty much everything. I mean, it was a hope and dream that the Fed was going to start cutting rates, but it was just stupid. And I said once we started taking out these support levels, you're going to start seeing the downside movement accelerate. We have this pattern here. This actually still could be in play because remember what I said. This pattern allows for a break of this trend line, and this would still be the target. Now, if we start taking out, let's say these lows here at the 43.84, then we're getting a little stretched because if we take these out and then we start coming down here, then this pattern is going to be wiped out. It's not going to be in play. Again, we're going to get a bounce in at one of these levels, and then you just watch what the resistance likes, and you sell the rallies. But we saw the Bulls try to hold this 40-40 line. Once that got taken out, that's where we started seeing. I'm sorry, the 40-20. That's where selling picked up. The Bulls were up 10. They ended up closing down 33. There's I don't want. I'm not a doom and gloomer. I'm not looking for a market crash. I'm not looking for that. We just have a very weak administration here. There's nothing going right, and people are trying to piece this picture together. This great painting of when the economy is going to start doing well again, and the Fed's going to keep lowering rates, and I mean it's just a pipe dream. Everybody they're living in something that's in the past that's not going to be around again. Doesn't mean that we can't make new highs in the market. It's just not going to be for the reasons that a lot of people are thinking. It's going to be money coming from overseas, money giving up on the bond market and coming into into the stock market. But it's not going to be for economic reasons. I mean, we're just in a rut. We have our debt that we're paying is astronomical, and we're just heading in the wrong direction. But when people start throwing out these pipe dreams about how things were going to be back in 2009, and you got to jump on the train, they're going to be very, very disappointed. I think that's pretty much it. But anyway, so if the Bears pick up right now, we're the 4,000, 4,400. That should be just rounded support, but really the support comes in down at this 43.84. This is very, very important. Well, let's just say this because we're already past this. So I'm going to move this and say this is the next very, very important, support area because once we start blowing through these, I mean, we're down at the 43.25, and that's when we start coming down into the 4,200. So right now, short term, this 43.84 is support. We do have bullish divergences on the 15-minute chart. If we take a look at the 60-minute chart, see this? The selling accelerated. So we had the nice bullish divergences coming here. We got a nice, couple bounces along the way, but they've been sold off before they're making new highs. And now this is not a bullish divergence anymore. It cleaned itself up. So that's kind of suggesting that we're going to be coming down to these levels where we're going to get a little bit of a pop, and that's probably going to be because of the 15-minute bullish divergences. But it should only come up somewhere up into the 44, say 30, 44, 40, and then these lows will be taken out. Now, if we open up down here, then we're still going to need that bounce up, but we're going to end up taking out these lows as well. And really, my main reason for this, analyst, is that when we get the bounce, no matter where it's from, this is going to start bringing up our technical indicator. And then when we come down and take these lows out wherever they are, that's where we'll get a set of bullish divergences and expect a short-term bounce. So the Bears are in control right now. The Bulls, really the first line in the sand, they got to get above the 44.38. If they do that, Then this heavy resistance is up at the 44.70. There is support again, 43.84. Then we go to 43.65, and then down to the 43.25. So these are the support areas until the bulls can start breaking through any resistance. The bears are going to keep trying to push it through. Once we get through these important things, is when you start seeing 100-point S&P moves to the downside. So with that, have a great night, and I'll talk to you guys in the morning.